Hello and welcome to another edition of Investing for Generations. And like every Saturday, today I want to talk about the Robinhood stock of the week. And this week it is Starbucks. I think almost everybody know this coffee house chain. This is all over the world and it was founded in 1971 in Seattle by these three very handsome people. That's Jerry Baldwin, Seth Siegel, and Gordon Bowker. These three founded Starbucks, first just one shop, and then they grew it to six shops, and a little bit later Howard Schultz took over and bought them out, and that's an incredible story. You should read about that. And I found one very interesting article here in the Business Insider. It's called The Incredible Rags to Riches Story of Starbucks Billionaire Howard Schultz, because Howard Schultz was the man who bought Starbucks from the three owner, and the rest, of course, is history. Today, Starbucks is all over the world, and here we just see a chart of the worldwide Starbucks coffee shops. This just took off end of the 90s, start of the 2000s, and right now it's almost all over the world. So that was an incredible story of growth and growth all over the world, with now over 23,000 Starbucks shops. But can this growth just last forever? Per Yahoo Finance are very negative on that and say in the next 5 years there will be just a growth of 2.71%. But we will come back to that a little bit later in the valuation of the Starbucks stock right now. So keep that in mind. Then dive deeper into the financial numbers. In the last 5 years, the revenue of Starbucks grew from 18.42 billion to almost $27 billion per year. And of course, the last 2 quarters just was very bad because of the pandemic situation. And this hits Starbucks very hard, as so many other kind of restaurants and shops. But before, of course, the growth was nice, and this was around 8% per year, which is good for a big company like Starbucks. And also when we look at the margins, especially the net margin, then we can see in the last 2 quarters, this was really bad. But before, in normal times, they have a very stable net margin of 10 to 15% and also a very nice operating margin of around 15%. So this business just make money all the time. Also, the return on investment looked very good before the pandemic, with a return of over 40%. This is good, but also there's just a little bit downtrend even before the pandemic. But still, then these numbers are very, very nice. And also with the free cash flow, we have the same picture. Starbucks have a very nice, stable free cash flow. And even in these last 2 quarters, with the hit of the pandemic, they still was able to make money and have a positive free cash flow. So that's also very nice. Then take a look at the balance sheet. The total assets of Starbucks is at $29.14 billion and rises up. That's a positive. But also we have to look on the other side on the liabilities, of course. We can see also the liabilities just rise and rise immensely. And so the liabilities right now are at $37.76 billion. And so we have a total assets to total liabilities ratio of 0.77, which is not nice because it just means they have way more liabilities than assets. I don't like that. And even worse is a debt equity ratio of minus 2.59 with a long-term debt of $22 billion, which is also rising. And this is not a nice picture, and maybe you wonder how this come. And the reason for that is that Starbucks in the past just bought a ton of own shares back. We can see this here. This was really incredible. The blue graph is the numbers of shares, and the green one is the stock price. And we can see that from the beginning of 2018 and then at the end of 2018, at the peak, I would say they bought so many shares back. The shareholder equity just go to a minus, and with it, the debt equity ratio. Share buybacks are okay, but I think this is just too much, and so I don't like that a lot. And also when we look at this Forbes article, August 29, 2019, this is a very critical article about the Starbucks buyback and the limit future upside. This is close to the truth. We will see this also later when we calculate the value of Starbucks and the upside or even not upside. Then take a look at the management. As I told you before, Howard Schultz bought the company from the two founders, and then he was a CEO for a long time. But in 2015, Kevin Johnson took over as a CEO, so also under his regime is this immense share buyback program. And let's take a look how the stock price at all just reacts under his work. When Johnson took over as a CEO, the stock price was at $46 and then just went up to almost $100 at the same time when this buybacks happened. So this was of course a boost for the stock price. But since then, since the peak, they almost come back to $50 in the March crash and now just go to $76. This is a positive sign for the CEO under his belt. But as I said, I just don't like the way he did it with the buybacks. Because I think also, as a Forbes article say, the money they invested in the buybacks is just not there for further growth. Then take a look at the price. The current PE ratio, the price to earnings ratio of Starbucks is almost 68. This is very high. Maybe you remember my video about Facebook. There I explained that the PE ratio or even a higher PE ratio doesn't mean necessarily that the stock is expensive. But with a slow grower as Starbucks is or right now is, a PE ratio of almost 68 is incredibly high. So let's check with a discounted cash flow method. This is really a sign that Starbucks is overvalued right now. First, I put a growth rate, and I was very optimistic in this calculation for Starbucks, and I didn't went with a 2.7 growth rate of Yahoo Finance. I at least said, okay, we will have a growth rate of 7%, and for the first 10 years, and for the second 10 years of 4%. So this is massively over the estimates of Yahoo Finance. Keep that in mind. Then I put it my discount rate, which is 12%. This is just my expected return out of almost any investment. And in the next step, I put in the earnings per share over the trailing 12 months. And to be fair, I just took the numbers for the whole year 2019. So the pandemic is not included here, which is also a fair point to calculate. And for the whole year 2019, Starbucks had an earnings per share of $3.05. And when we calculate that, then we come to a fair value of $37.07 to a current price of $76.50. Or in other words, even with this very optimistic calculation, the stock is way overpriced. And of course, if the growth rate is not 7% or as expected from Yahoo Finance, just between 2 and 3%, things would be even worse. So what's my conclusion then? With Starbucks, we have the largest chain of coffee houses worldwide, and you can find it almost everywhere in the world. So we have a very strong brand, of course. And this, to go to Starbucks, of course, is kind of a lifestyle. But on the other hand, we have a very slow growth. It looks like they just hit the sky. A not very solid balance sheet after all these buybacks. I don't like that. I mean, they are not in big trouble because of that, but this is just limiting the possibilities for the future, and I don't like that. And as we learned in the calculation of the price and of the value, it looked like not just the coffee at Starbucks is overpriced, also the stock price is way too high right now. That's my conclusion to Starbucks. Let me know in the comment section if you agree or disagree. I'm happy about every comment you can give me. Maybe I overlooked something, but for me it's very clear that I will not touch Starbucks anywhere soon. So that's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel, ring the notification bell to never miss another video with the analysis of another stock. See you then, take care, bye bye.